This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Bounce back rally. Why the Dow and the S&P 500 had their best day in 5 months, even as the world remains on edge.
Giving credit where credit is due. And now, after a major overhaul, millions of consumers are likely to see their credit scores rise.
Last chance. Why pressure is building to change the system that grants very ill patients access to unapproved drugs. The third part in our series, Desperate Measures. All that and more tonight on Nightly Business Report for Friday, August 8th. And good evening, everyone. I'm Sue Herrera. Susie Garrett has the evening off.
And welcome, everybody. I'm Tyler Matheson. I don't know about you, but I am glad the trading week is over. I'm ready to inject liquidity, frankly. It sure didn't feel like an up week for stocks. Not at all. Not with all the flare-ups around the world, but it was. In fact, after today's strong rally, all three of the broad market barometers, the Dow, the S&P 500, the NASDAQ Composite, finished the week in the black. And for the Dow and the S&P, today was the best performance in 5 months. The Dow closing near the highs of the session, up 185 points. NASDAQ higher by 36, and the S&P 500 rallied 22. And for the week, each of the big three were up at least 1/3%. Investors gobbled up stocks, seemingly unworried about a broken ceasefire in the Israel-Gaza conflict and U.S. airstrikes against Muslim extremists in Iraq. But the real catalyst for today's rally, however real it may be, were reports out of Russia that tensions may be easing between it and Ukraine. Here's Michelle Caruso-Cabrera.
The market rallied in the early afternoon when a Russian news agency reported that Russia was ending its military war games on the border of Ukraine. This caused a relief rally because throughout the week, expectations steadily increased that Russia might invade Ukraine to support the separatists who seem to be on the verge of losing the city of Donetsk. The president of Russia, Vladimir Putin, has backed down before. It happened in May, and yet subsequently the West said he supported the rebels with equipment, training, and even troops. So it remains to be seen exactly what this headline from today means. Earlier in the day, the trading session got off to a rough start due to nervousness about the growing humanitarian crisis in Iraq. Overnight, the U.S. military dropped food and water to thousands of Iraqis who are members of a minority religious sect. They have escaped to a hot and dry mountaintop in Sinjar, Iraq, because the Islamic militant group known as ISIS is threatening to kill all of them. The UN says dozens of children have died of dehydration. Then early this morning, right before the open, we learned the U.S. had bombed a group of militants who were threatening the capital city of Kurdistan in northeast Iraq, Erbil, where a U.S. consulate is located. Although Iraq is clearly a very serious situation, the moves in the markets today show that investors are far more concerned about the standoff with Russia. For Nightly Business Report, Michelle Caruso-Cabrera.
So why did the markets react the way they did today? Tonight's Market Monitor has some thoughts on that, as well as some top picks for you and me. He's Charles Carlson, and he is the CEO at Horizon Investment Services. He's coming to us this evening from Chicago. Welcome. It's nice to have you here, Chuck.
Nice to be back, Sue.
What do you make of the way the market performed today? I found it very curious. We had this big kind of relief spike mid-session.
Well, I think you called it with a relief spike. The market had become oversold on a short-term basis. You had traders out there hearing the news, possibly what's coming out of Russia, not wanting to take positions into the weekend, and I think there was some short covering as well. And then finally, you know, markets do correct, but at some point those corrections end, and stocks are ready to resume their upward move. So, you know, we are at a point where you would expect a bounce. A bounce happened today. We'll have to see if there's follow-through next week.
Yeah, a bounce is one thing, but a resumption of an upward move, which was the reference you just made, is quite another. Do you think this is that turning point?
You know, this has more of a feel of less of a bottom conviction buying than short covering. Having said that, we still regard this as a correction within an ongoing bull market, and this correction has met the typical historical standards of a correction in terms of its duration and length. So, you know, maybe we haven't seen the bottom yet, but I think we're probably, you know, on the Dow Jones Industrial Average, you know, that 16,000 level seems like a pretty good support to me.
You've come up with a few ideas for our viewers tonight. Let's start with your first one, Halliburton. Why do you like it?
It's a group we like. It's a stock that continues to grow at double digits, both on the top and bottom line. You can buy that growth at what we believe are still reasonable values. And they're coming off a pretty solid quarter. And, given this latest downturn, that stock's trading at a discount of about 8% to its 52-week high. So we just think from the standpoint this is a bull market. We think stocks will resume their upward trend. This is a quality stock that you can get now at a discount. You got to take advantage of it.
And a lot of people like you like that sector. Let's move to your next pick, which is Ameriprise Financial.
Ameriprise Financial is a nice demographic play. You've got, continuing aging of America and the people looking at retirement and investing. Ameriprise has a nice position in that space. I like the dividend yield, which is about 1.9%. I can buy the stock at around 14 times its 2014 estimates. So again, it's that story where I'm getting double-digit top and bottom line growth and not overpaying for it, getting a dividend yield. And those are the types of stocks I think will do well when this upward trend resumes in earnest.
And finally, in another sector, Comcast.
Yeah, it's a cash machine. I like distribution companies. I also have content. I think the Time Warner cable deal is going to be a good one for them. They're coming off a very strong quarter. You get a nice dividend of 1.7%. So it's kind of that complete total return package in a company that has good operating momentum and in an industry that I think can continue to do well and probably buck a fairly volatile market here.
Chuck, let me ask you one final thought on bonds, which Sue and I have been watching very closely. The year began with everybody saying bonds were going to go to 350, the 10-year, or 375, and they haven't. Why?
No, they haven't. Well, probably because everybody was expecting them to do that, and the markets have a tendency of not doing what everyone expects. I think the way we frame what to do in bonds right now is, quite honestly, if you can earn a little bit more in cash than you can in bonds, you own bonds. I don't think anybody's getting cheap or getting rich in the bond market, and I still think stocks relative to bonds are the place to be. But I don't think you're going to see a total washout in the bond market this year. And again, as a place to try to generate a return better than cash, I still think they have promise for that.
Chuck, thank you very much. Any disclosures before we let you go?
Yes, our company and our clients own all three of the companies that I mentioned.
Terrific. Thank you so much. Have a great weekend. Charles Carlson, CEO of Horizon Investment Services.
Tough times for the world's biggest burger chain, with sales falling flatter than an all-beef patty here in the U.S. and around the world. So what does McDonald's have to do to get cooking again? Sarah Eisen has the story.
Investors are not loving the news out of McDonald's today. Sales continue to fall. Global sales for stores open at least a year fell 2.5% last month, the worst drop in more than a decade. The immediate concern? Asia. McDonald's having to pull Chicken McNuggets and other menu items as a result of a food safety scandal. Authorities there investigating one of McDonald's suppliers for selling expired meat. Sales in Asia Pacific fell 7.3% for the month. And the problem is it could have a more lasting effect as consumers lose trust in the brand and turn to local alternatives.
Comps in China and in Japan running down high teens, 20%. I don't think that's going to turn around anytime soon. I think that can take, 6 to 9 months for this to kind of blow over a little bit.
The company says the full-year outlook is now at risk as it weighs the fallout from the supply shortage and the impact on consumers.
A longer-running problem for McDonald's has been finding sales growth in the United States. Its home market still making up more than 30% of the total business. In fact, this is the 8th month out of the last 9 in which sales have declined. And competitors like Burger King and Wendy's have been doing better when it comes to connecting with their core customers.
There's really no low-hanging fruit. They were taking share from all their competitors for many, many years. And right now, everybody's nibbling a little bit back at them and taking some share back.
Investors are growing impatient. CEO Don Thompson says the company is working to revamp the menu and find new options that consumers want. But repositioning a company with 35,000 stores around the world is going to be an ambitious task. And the fact is, fast food is out. Healthier, fresher options like Chipotle are in. And those brands are eating McDonald's lunch. For Nightly Business Report, I'm Sarah Eisen in New York City.
Big changes are coming at FICO regarding how it calculates a person's credit score. And these changes could be a big help for millions of Americans struggling to get loans. Mary Thompson has more.
You may feel better after a hospital stay, but medical emergencies can really harm your financial health. A 2012 study found 75 million Americans had trouble paying their medical bills. hurting their credit scores. Now, FICO plans to treat those debts differently for some under a new way of modeling creditworthiness called the FICO Score 9.
What we found is that unpaid medical debt that's in collection, if someone has an otherwise pristine credit history, it is not an indicator that they're having trouble. It's not a sign that they're having trouble repaying their debt. It's an anomaly. And so as such, it should be treated differently by the FICO score.
Under FICO Score 9, medical debts held by collection agencies would carry less weight in determining a credit score, while debts held by collection agencies that have been paid off would have no impact at all. The result? Higher scores for many consumers. Here's FICO's Anthony Sprov.
For someone whose credit score and their credit history is pretty pristine, they have no other derogatory actions, it could boost their score by about 25 points.
But why treat medical debts differently? First, the debt is unpredictable, often causing short-term problems even for financially responsible people. Second, the Consumer Financial Protection Bureau says billing problems and confusion about what's covered by insurance often means a consumer doesn't know they owe money until a collection agency holds the debt and their credit score is impacted. A 2012 study found 18% of adult Americans had medical bills that were held by a collection agency, and 42% of those people said this hurt their credit scores. And while FICO Score 9 holds a promise of more credit at lower rates on some loans, it won't improve a person's chance of getting a mortgage. An earlier version of FICO, known as the FICO Classic, is one of the many factors that banks use in assessing a client's credit worthiness, meaning that a higher score won't translate into a total financial victory. For Nightly Business Report, I'm Mary Thompson.
So what are the 3 things you can do to improve your credit score? Jerry Detweiler is the Director of Consumer Education at Credit.com. Jerry, great to see you. I want to start, though, by asking you, how and where can I get my credit score or my credit report?
Sure. Your credit report you can get free once a year at annualcreditreport.com. That's your federally mandated free copy. You can get a credit score for free at credit.com, and your financial institution may offer you one as well on your billing statement.
So, Jerry, if indeed you suspect or you find out that you do have issues with your credit and your credit score as a result of that, give me a few ideas of how you can repair your credit and how long it might take to repair that credit.
Well, one of the fastest ways that I see consumers improve their credit score is by paying off their credit cards faster. The FICO score looks at your balance compared to your available credit. And if you're someone who even pays in full, but you're maxing out that card to earn rewards, the balance may be high compared to the limit. So pay that down, pay it faster. You can see a quick improvement. Another thing is the collection accounts you just talked about that will be changing. I don't think it'll happen soon. There'll be an implementation period. But right now, if you're dealing with collection accounts, one strategy is to pay them so that they don't wind up with a second or third collection agency if they remain unpaid.
And another area that Mary Thompson just mentioned are medical bills, which sometimes we tend to forget about. We don't know that they're going to show up on our credit report. But of all the categories of debt that can damage you or even lead to bankruptcy, medical bills are number 1.
Exactly. And this is something that happens to people even with excellent credit. You know, that one bill you thought insurance was going to take care of slips through the cracks. Next thing, it's with a collection agency. So I really encourage consumers, anytime you get medical treatment, anywhere, stay on top of those bills. And if you don't get a bill, call the medical provider and find out why, because it could be going to the wrong address and you could hear next when it shows up on your credit report.
You know, okay, so let's recap. Pay down the high balances. Watch your medical bills, resolve collection accounts. I've also heard that be careful how many department store or individual retail accounts that you open. Is that correct or not?
Yeah, exactly. It is to some extent because new credit is a risk factor in your credit score. And so that's why it's usually recommended that you're very careful about applying for new credit. If you really want a new card, that's fine. But holiday season is coming up. You don't want to take advantage of all those offers that you'll get at the cash register because doing so will definitely have an impact on your score.
All right, Jerry, thanks. Always great to see you.
Thank you.
Jerry Detweiler, Credit.com.
Still ahead, which part of the real estate industry is having a blowout year? We'll tell you. That story's coming up. A federal judge has rejected a $325 million settlement between Apple, Google, Intel, and Adobe and tech workers who said that those firms conspired to stop poaching each other's employees and therefore they kept salaries down. The judge says the amount, quote, falls below the range of reasonableness, end quote.
Pfizer reportedly facing a surge of lawsuits over its blockbuster drug Lipitor. And that's where we begin tonight's Market Focus. According to Reuters, a fast-growing number of women have filed lawsuits against the pharmaceutical giant. These women claim the company knew about serious side effects associated with the cholesterol-lowering drug, but didn't inform the public. Some of the alleged side effects include causing type 2 diabetes and inducing memory loss. Despite that, shares of Pfizer were higher today in the upward market to $28.34. Sotheby's posted weaker than expected second quarter earnings and revenue. It blamed the weak results on a higher tax rate and special charges. Shares down nearly 8% to $37.49.
Breakfast cereal maker Post Holdings cut its earnings outlook for the year, sending shares way down in today's session. The company swung to a loss in its most recent quarter on charges related to a recent string of acquisitions. Despite that, though, it announced another acquisition. It will buy peanut butter maker American Blanching for $128 million. Shares tumbled 16% to $37.43. And shares of Techmira took off today as investors got a chance to react to some good drug news. The Food and Drug Administration cleared the company's experimental Ebola drug for potential use in humans affected with the virus. Now Techmira will be able to use the drug in limited experiments. The stock surged up 45% to $20.07.
A New York City office building owner is gearing up to have the largest initial public stock offering ever by a real estate investment trust, or REIT. Paramount Group, which also owns properties in San Francisco and Washington, D.C., is looking to raise as much as $2.7 billion in its IPO.
And those real estate investment trusts have had a pretty good year, outperforming the overall market. These high dividend-paying stocks are taking advantage of low interest rates and investor desperation for yield. Diana Olick has that story.
Apartments, warehouses, offices, even retail malls. Commercial real estate is climbing out of the recession with a vengeance.
I cannot remember a time when you had such a confluence of strong real estate fundamentals, relatively disciplined supply, good demand, and accommodative capital markets. So from a fundamental perspective, we're really relatively constructive on commercial real estate and institutional quality commercial real estate specifically.
U.S. equity REITs are up around 15% year to date with a dividend of about 3.5%. Compare that to the S&P 500, up around 4% with a dividend yield of 2%.
Low interest rates are positive for REITs because they really offer investors an attractive yield alternative relative to treasuries or fixed income, and you have a growth characteristic to that dividend yield, that will go up and increase versus kind of a fixed return over a period of time.
Apartments are still a top pick despite concern last year of overbuilding. Avalon Bay, Equity Residential, to name a few, fueling the 25% year-to-date jump in this REIT sector. Freddie Mac reports the supply of new units is being absorbed. They point to nearly 4 million potential households that weren't formed during the Great Recession. Over the next decade, close to 500,000 rental apartments may be needed to meet that growing demand. Office is still mixed as employers are hiring but downsizing their workspaces. But even retail malls are starting to get some love after underperforming other sectors.
The good results, both GGP and Simon put up a beat and raise quarters, and I think that sentiment will start to come slowly back towards in favor of the mall stock. So I tend to believe that they will work well in the second half.
After such strong results in the first half of this year, analysts are not banking on double digits for the second half because the biggest risk to all of this, of course, is rising interest rates. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, when experimental drugs are a patient's only hope and the pressure to change the system to make access to them easier. The final part of our series, Desperate Measures.
Tonight, the final report in our three-part series, Desperate Measures, on the challenges terminally ill patients and their families face when treatment options run out and the only thing left to try is experimental drugs. Among the challenges, a lack of uniform guidelines or laws that determine which patients can get access to those new and unproven medications. Meg Terrell has the story.
Compassionate use is a last resort for the sickest of patients, like Natalie Trawler, a 15-year-old who's been battling an aggressive cancer for 2 years.
When we found this new promising medicine, PD-1, we definitely wanted to participate in the trial, and we asked for compassionate use, but they denied it.
Companies can use compassionate use to give patients access to experimental drugs outside of clinical trials.
There are 3 parties in these expanded access programs: the patient and their doctor, the FDA, and the pharmaceutical companies, and all 3 have to be in agreement if the drug gets to the patient.
It is not a simple path, and a swell of public outcries is putting pressure on the system to change. One issue, a lack of guiding industry principles. Tony Plahoros consults for drug makers, fielding requests for compassionate use.
Is there an individual sort of arbitration process that can be put in place, or should there be a universal sort of set of principles that regulators and companies might agree to that won't be compromised in the face of a strong public pressure campaign?
Another initiative is Right to Try, a law that's been passed in 3 states and is being considered in several others.
The Right to Try is about giving terminally ill patients the right to fight to save their own lives.
The Goldwater Institute designed the laws, which removed the need for the FDA to sign off on compassionate use requests.
As soon as a doctor tells the patient that there is a promising drug for you, the patient can then go out right away to the company and seek that approval. And that's going to cut down on the time that patients have to wait enormously.
The FDA counters that the laws are focused on the wrong place. Of 977 applications for compassionate use that made it to the FDA last year, all but 3 were granted.
The potential problem here is the pharmaceutical firm has to agree to give the drug.
Bioethicist Art Kaplan puts Right to Try a different way.
But they're right to beg laws.
And he says other changes are needed, including creating funds for patients to pay for treatment and travel. And in addition to a push for getting medicines to market faster, Kaplan says regulators could make other changes to facilitate compassionate use.
The FDA probably could be a little more flexible, probably need to have some reform there to say if people die taking experimental drugs, we won't hold that against the drug in terms of the approval process. We want to know, but we're not going to penalize you.
The focus on compassionate use has risen to a federal level, with a push to gain more data on how the system's working. Any changes, though, may not come soon enough for patients like 15-year-old Natalie Trawler and the many others battling diseases with no good options.
Every day that we don't do something or don't try to fight the cancer, like that's another day that the cancer can grow and get worse. So we always feel that in the back of our minds, that pressure that there is a time limit.
Meg Terrell is with us now. Meg, you mentioned that the federal government is becoming more interested in compassionate use. What, if any, kind of changes are brewing?
There's really a focus on gathering more data. There aren't good numbers on how many of these requests get made to companies and how many are denied. The figures we showed were just from the FDA, and that means they'd already gotten through the companies. And then the FDA had a chance to review them, and they only rejected 3 at that point.
The FDA only rejected 3.
The FDA did, but we don't know how many go through companies. And so there's a push to understand that better, and also some legislation potentially brewing that would ask the GAO to take a look at how well compassionate use is working.
The momentum is really kind of building right now, but how long has the system been in place, really?
So it actually started in the 80s. The compassionate use system was put into place in 1987. This came into place around HIV/AIDS, and then was adopted again by breast cancer activists in the 90s with a drug called Herceptin. So this has been around for a long time, and there have been reforms made to the system. But it's interesting because now there really does seem to be a momentum building for the system to change, and it's through things like social media. It's because companies are pursuing rare and unmet need diseases, and so people are at a much bigger need for these drugs.
we're a little short on time, but I wonder whether some companies are known as more compassionate than others. It may not have to do with their compassionateness per se, but with where their drugs happen to be working.
No, it's really interesting that you bring that up, because in this story we focused on 3 companies that Natalie was asking for drugs from. One of them was Genentech, and actually in the 90s they were involved with that drug Herceptin, and they did figure out a compassionate use program, but not until they'd been pressured strongly by these breast cancer activists. So it often takes a lot of patient voice and power.
All right, Meg, thank you for your reporting. A wonderful series. We appreciate it very much.
Keep us posted on Natalie's progress.
And to read more about Meg's series on compassionate use, head to our website, nbr.com. And that will do it for Nightly Business Report for tonight. I'm Sue Herrera. Susie is back on Monday. Have a great weekend, everybody. And I'm Tyler Matt. It's been great being with you, Sue. It's been fun. Thanks for filling in. Have a great weekend, everybody. We'll see you Monday, and we'll see you, Susie, on Monday, too. Absolutely. I'm Tyler Matheson with a Nightly Business Report news brief. Wall Street rallied today despite U.S. airstrikes on extremists in Iraq and rising tensions in the Mideast. The Catalyst reports out of Russia that its military was ending war games near the Ukraine border, and with that, the Dow and the S&P 500 notched their best session in 5 months. They closed near the day's high. The Dow was up 185, the Nasdaq higher by 36, and the S&P rallied 22. Each average ended higher for the week. Federal judge has rejected a $325 million settlement between Apple, Google, Intel, and Adobe, and a group of tech workers who say the firms conspired not to poach each other's employees and, as a result, kept salaries down. FICO is changing the way it calculates medical debt in order to boost credit scores and lending. And tune in to Nightly Business Report here on your public television station.